Good morning. Market day report. Tariffs. And how about, reciprocal tariffs out of China? That 15% on chicken, wheat, corn, and cotton. Another 10% on sorghum, soybeans, pork, beef, and dairy products. How is that affecting the market? Well, let's look at quotes real quick. We'll start with the corn market. As the May contract trades down 8 1/4 at 448. New crop 445 1/2. It's off 5 3/4 cents. And the soybean trade, we've been lower 7 consecutive sessions. Now, we did have a flash sell overnight, unknown destinations for soy oil, but the bean market down 15 1/2 on the May at 9.96. We mentioned soy oil. Is it moving the meter? Well, no, not really. And what about soy meal? Soy meal is also lower. Wheat market and flash sell to South Korea. This would be white wheat, 130,000 metric tons, but we're lower across the board. July down 12, 549 1/4. Hard red, the July is new crop 561 1/2, just a tick off the morning's low, down 14 1/2, and then spring wheat, December, 630 a bushel. It's off 4 3/4 cents. Finally, cotton market is much lower. The May contract, 63.22, down 229 points. That's 2.24 cents. And the new crop is December, 66.65, down 144. Let's bring in Chris Swift. Chris is with Swift Trading here in Nashville. And Chris, first off, welcome back to the show.
Yes.
But man, you picked a day to come in because it's not really fireworks at this point. It's just the bottom falling out.
And it did. It fell right out. Of course, we always talk about the sun and the sunshine and the dog. So today, if we look at it, livestock producers have been paying a premium on corn for the last 5.5 months. Corn bottomed in August of last year, traded sideways, and then rose for the last 2 months on there. So it's a really great opportunity now for livestock producers to be able to buy corn 65, 70 cents cheaper than what they were before. And it also gives our grain producers something to look forward to. Even though it may continue to collapse and we may go to $3 or whatever, but if you're looking for opportunity, own the $5 corn calls. If you're a farmer and you're going to raise corn and we have a drought, we have anything that pushes corn back, a knee-jerk reaction brings December corn back up towards $5 a bushel, you can make those cash sales and still remain long the market. So it's a courage call. It's something that allows you to make a move and still be able to be long the market with a fixed risk derivative.
All right. We also have our crop insurance rates now. Those were set in February based upon average prices. For corn, I've got us at 470, soybeans at 1054. And, you know, we were looking at that going, wow, soybeans, that's quite a bit lower than last year. Corn's higher. But with the market doing what it's doing right now, what are your thoughts?
Well, really not much different. When we talked about the tariffs earlier, you discussed that on there, and that's a tax. That's exactly what it is. It's just a tax on those goods, and once you assess that tax and get it over with and you find the need is still there, you're going to buy it. And that's what we found out in the cattle market earlier. When you need the product, you buy it. And so that's kind of where we are right now. We're just resetting the gauge right now because we believe there's going to be tariffs, and probably a lot of the rally that we saw earlier before this collapse was in lieu of that. Hey, we know we're going to have a tariff on, so let's buy some before the tariff starts.
Well, if we're going to buy what we need, I need coffee. We'll take a break. We'll come back in a moment. We'll talk livestock futures with Chris. Market Day Report continues in a moment. So the cattle markets yesterday were lower, hog markets higher, and we'll jump to that in a moment. But I said, you know, I might need to go buy some coffee. How about we start with the coffee market here? Look at that May contract, $396.45. We've been up to $398.70 in the March at $391.85. But the point is when you look at that May through December contract, on coffee, it's moving higher. We're going to bring back in Chris Swift in just a moment. Cocoa market was on fire last year, and has given back quite a few of the gains. Year to date, we're down 28%, down over 5% over the past week, but a little rally going on in the cocoa market. One more here in the softs, and that's the orange juice market. Has lost over 40% here in 2025 and under pressure this morning. Okay, as we bring back in Chris, and Chris, I'm going to flash some of the quotes up here, but what are you watching here in live cattle as the April contract hits 191.65 down 60?
How wide the positive basis is. Cash is trading 197, 198 last week, and here we were at 191 on the April futures. So there is nowhere to sell cattle any higher than today. And the same thing with the feeder cattle right there. We see them down pretty sharply. In the feeder cattle, there is no place to sell them any higher than today. And you got an enormous rally in the feeder cattle over the last 2 weeks, and you didn't in the fat cattle market. So that really put a lot of stress and strain on the cattle feeder. We're not real sure why exactly they did that, but they did. And that has really put a stress on them. We saw that the starting, the feeder cattle index versus the August contract, which if we started cattle in March right here at 850, they'd be ready for slaughter in August. There was a $93 spread in those two prices. So you've got to make up a tremendous amount of price alone on weight. And what we have seen the industry do in every sector is have to manipulate their production practices. Anytime, one starts it, then the other has to start it. And now what we've seen is just about every sector is having to manipulate either their growth or their processing in some manner to try to bring margin back.
Well, and same thing, would you agree in the hog space as well?
A little bit. There's a little bit of difference there. Right now we're trading still, again, a positive basis in the front end of it where the cash market's a little bit higher than the futures, but a little bit different. We still have all kinds of hog production, and any pork production would be in small percentage changes, I would think, where the cattle could be in fairly large. We could continue to import more and more beef.
All right, as we wrap up here, wanted to go through our energies real quick. Crude oil has been in the red this year, down nearly 6%. We're lower this morning at 67.18. It's off $1.19. How about two markets in the energy sector that have performed pretty good? This one up 9.8% over the last week. Gasoline, or RBOB, April in the red this morning. And then the one that's really taken off, 31% higher over the past 30 days. It's gained over 21% since the first of the year. Nat gas, any thoughts?
Absolutely, the Widowmaker.
Yep, that's right. So that's kind of where we start our trading day, Tammy, with we're all over the place.
All over the place.
For the most part, commodities under pressure will probably remain there for the rest of the day.
I'm already
cut out for you
exhausted.
today.
Yeah, and it's only 9:25 Central. Thank you, guys.